Without further ado, just because of timing, I'd like to introduce our next moderator, Tatiana Koffman. Tatiana started her career with the intent on being a lawyer. However, she transitioned into capital markets, where she's been for the last few years. She was primarily working across M&A, venture capital, and derivatives, with the most recent transition into cryptocurrency. I've had the pleasure of knowing Tatiana for some time now and having traveled with her to various conferences around the world. She's a notable writer and contributor to Forbes, amongst other major publications, on topics about the future of money. She's hosting a podcast that is rapidly growing and gaining renown, and is currently authoring a book on the future of money. So Tatiana, without further ado, why don't you take it away, introduce your panelists and discussion topic for the day.
All right, thanks so much, Zach. So today we have a panel on regulations, ethics, and public policy in the cryptocurrency sphere. I am joined by James Lasry, who leads the funds team at Hassan's International Law Firm, a leading firm in Gibraltar for alternative funds. He also serves as deputy chairman of the Gibraltar Funds Industry Association and is a member of the Gibraltar Finance Center Council, and so much more. We also have Toufic Adlouni, a Canadian emerging technologies attorney, co-founder and managing director of Reno & Co, and LOB alumni from Laval University, and also an entrepreneur at heart. Guys, I have so many questions today. I feel like cryptocurrency, although it's been around for 10 years, is still in so many ways the wild, wild west of regulation. We saw the ICO craze in 2017. We've seen multiple SEC judgments over the last couple of years. Where do you think the regulation's heading in 2020, and what are some of the major developments we can expect to see this year?
Well, I'm happy to start.
Thank you, James.
Thank you, Tatiana. The regulations have started quite slowly. ICOs went by, they came and went before any regulator really had any time to do anything about it. So what has happened, and some jurisdictions completely banned the cryptocurrencies wholesale. What has happened in some places, and we're going to see that this is going to become a trend, is that regulators have decided that they can't, at least in most places, they can't regulate the actual use of cryptocurrency. But what they can do is they can regulate the service providers of cryptocurrency. So, for example, in Gibraltar, and this is quite old legislation by now, Gibraltar being a small place, they're able to do things quite quickly. Gibraltar regulated the regulations came into force in January 2018. And the idea there was, if you want to buy cryptocurrency on your own, regulation and the law will not get involved. However, if you want to create a cryptocurrency, if you want to offer this currency to the public, if you want, or more importantly, if you want to use blockchain to store or to transmit value for third parties, then there's a licensing regime in Gibraltar, and the licensing regime is it's principles based. So you have to, there are about 9 or 10 principles that you have to show how you comply with them. But ultimately, it comes very close to what you would expect with a MiFID license. In other words, a financial services license, which makes sense because the service providers for cryptocurrency who are using the blockchain to store value on behalf of third parties or to transmit it, in a sense, they're acting as quasi-banks. So it's normal that you would expect there to be some sort of government regulation on that. Gibraltar was very innovative with this, and they started very early. But other jurisdictions have not been very far behind. We just saw about a month ago, the European Union came out with MiCA, the Markets in Crypto Assets Directive, which is a draft directive, but it'll come into force in a couple of months. And they have the same, they seem to have the same principles. that if you want to be a service provider for crypto assets, then you need to have some quite fairly heavy regulation on you. In other words, you need to establish yourself with a corporate entity. In the case of the EU legislation, it's that they want you to establish yourself in the EU, in one of the member states, and you have to be capitalized, and you have to have an office, and you have to have staff, and a compliance manual, and a compliance officer. Like there's a whole raft of measures that you need to comply in order to be able to store or transmit value on behalf of third parties, or to be essentially a service provider. The FCA recently took a similar but slightly different position, and they banned the issue of cryptocurrencies to retail investors completely. You're still allowed to offer these services and these currencies to professional investors, but so far retail investors are no go in the UK. And so the question is, how much should we want the state to get involved in this asset class? And I think that the regulators have actually taken a quite pragmatic approach, in that they have said, look, we can't really stop people from buying Bitcoin, and we have to give people a little bit of freedom, even though we don't really know what this is, or now that we know what it is, we're not so happy with retail investors buying it or other cryptocurrencies. But what we can do is we can try to regulate the service providers, and that is so far what they have done so far on this side of the pond.
Is Bitcoin also regulated as a commodity where you operate in Gibraltar?
No, it's not, and it's still not completely clear. In fact, this whole issue of what are cryptocurrencies has been a fascinating question, because in the United States they decided that it wasn't. It didn't pass the Howey test, but I think it was a very clever legal construction that they came up with in the United States to decide that cryptocurrencies and ICOs are not securities. But I'm not convinced that that conclusion is of these currencies and coins really do have a lot of features that seem like secure. And it would make sense that a lot of the protections that you would expect when you're dealing with these securities, when you're issuing these securities, would in fact apply. So far that hasn't been the case, although the SEC has come down on a couple of issuers, and I'm not sure if that's where the law will end up. But personally, I do see many of these things qualifying as securities, which would mean that they should have all of the protections that securities entail in the various jurisdictions.
Yeah, just to
absolutely. Thank you so much.
Maybe just to jump on that. So, yeah, I think it's not super clear cut, at least on this side of the pond, with respect to how cryptocurrencies behave, and actually, even in the sense of Bitcoin, depending on how Bitcoin is transacted, it can actually be considered something different depending on the way in which it is used. I don't think that all ICOs, even in the regulatory sense here in Canada, the United States, are considered out of scope of the SEC. A lot of them, you've correctly said, if not most of them, I would even say, have features that make them act as a security or potentially a derivative, and that actually puts them into the scope of the SEC and other kind of regulatory bodies, such as FINRA and the like. So in reality, it's completely unclear to the crypto community what the hell's going on. It's even more unclear because different regulators are approaching it differently. You know, the Europeans are doing it in one way, which is, as you said, you know, regulating the service providers. While here in Canada and the United States, there's a lot of talk about the actual issuances and how the actual tokens are behaving in the market. And with that in mind, it creates, you know, huge amounts of uncertainty. There is some positives in the SEC with the changes to Reg D to allow kind of people with domain expertise to actually invest in private issuances. This allows for an additional exemption for people who are potentially, this is still not completely defined, so you know, don't get your hopes up too much, but potentially if you have a domain expertise in cryptocurrency and in fintech, you'd be able to rely on a Reg D exemption to be able to go through with an investment. But on the other hand, the SEC has come out to say that, you know, most, if not all, tokens in a certain sense have aspects that are securities. You know, just even one case that I like to cite is the pocket full of quarters case, where, you know, if there's a token being sold on a secondary market, there is an aspect to securities in which applies to that. And you'll see a lot of actual tokens, their whole basis is to be sold in a certain sense on the secondary market. Furthermore, here in Canada, they, you know, especially the OSC, they've come out with, you know, a very, very bold analysis with respect to even trading Bitcoins on exchanges, is that because there is no change of possession, control, and ownership of the Bitcoin when trading on exchanges, you are not actually trading a commodity, but you're trading actually a contract with an underlying asset, making it a derivative. This is something that I see there's going to be a lot of contention, or I believe there will be a lot of contention in the crypto community and potentially in the courts if they decide to rely on that kind of viewpoint to bring some of these exchanges and file notices against some of these exchanges. It is all remaining to be seen. And even on another point, I know the service provider point seems interesting. I know I'm here in Bermuda right now, and in Bermuda, they've kind of taken a similar aspect, creating a licensing regime to be able to capture a variety of the folks who are doing crypto business. And the regime here, the DABA regime, is very much touted around the world as being quite innovative. However, you have kind of new innovations in crypto, such as DeFi and the like, where you're kind of questioning how does the DABA regime actually be able to encapsulate that? And that's probably one of the reasons why the Canadian regulators and the SEC have been a little less quick to act, because they're so unsure about the market maturity that they believe if they come in with a certain regime, that in 2-3 years, the next fad in crypto will really be still difficult to apply to that regime. And then you're stuck at the same place you were 3 years ago, where there's a lot of regulatory uncertainty. So yeah, I didn't know if I'm not giving a lot of people a lot of confidence here, but it is definitely murky waters.
Yeah, absolutely. Thank you so much. James, please go ahead.
If I can pick up on that point, Toufic, that's in fact why the regulations in Gibraltar, at least, they have been principles based. You know, it's not prescriptive on how you have to comply with the different sections. There are more 9 principles that you have to explain how you address them. And the reason for that was exactly the reason that you just mentioned, that they were worried that as soon as the ink was dry on the page, the regulations would be out of date. And so that's one way that they have of dealing with it. The downside to that, I must say, is that you sometimes have to reinvent the wheel for each new project. So there's flexibility, but the flexibility takes away precedent. So it's, I suppose, swings and roundabouts.
Absolutely. And speaking of reinventing the wheel, I feel like the regulatory landscape has just gotten used to how to do token issuances or not to do them without breaking the rules. And now we have a new era of products called DeFi, or decentralized finance, which are financial products mostly written into Ethereum and subsequently will be written into some of the other chains. How is the regulatory landscape different for these DeFi projects versus what we've seen in the past?
So if I could jump in here, I think with DeFi, it's essentially deja vu to 2017 almost, where I feel like the crypto community hasn't really learned from 2017, and I guess it's quite unfortunate because I'm a big proponent of kind of internal group regulation, and I'll get to that in a minute. But essentially, DeFi is, lawyers hate to paint broad brushstrokes, but I think I could paint a fairly broad brushstroke to say that many DeFi projects are operating illegally at this time, at least in the Canadian and the United States perspective. And they would need at least some sort of licensing, whether it be banking, whether it be investment fund, whether either it might be gambling as well, depending on the project. And it's unfortunate that the community hasn't been able to actually learn from 2017 and understand that the reason why regulators are have such a, I would say, a negative perception of the crypto community is because of these certain bad actors who in 2017 engineered pump and dumps in order to make a quick buck. And I don't care if you pump and dump on capital markets or in cryptocurrency, it's still an illegal activity. And now we are seeing kind of yield farming, which is essentially similar to pump and dumps. And you have same behaviors manifesting themselves. And I think it's not doing the community any justice. I'm a big proponent that with a regulatory void comes a certain opportunity, an opportunity for the community itself to actually place standardizations and internal guidelines in which we can kind of self-regulate. And in the sense, when you self-regulate, what you're kind of doing is that you're getting ahead of the regulator, so to speak, and setting your standards that are favorable to you, but that are also in the spirit of what the regulator is looking for, which is, ensuring the protection of investors and ensuring the efficient functioning of capital markets. When you have those principles in place and other principles such as KYC, AML baked in, and other types of compliance principles that are part and parcel to the industry, then what you actually do is that you dictate to the regulator how to self-govern. And then the regulator will take notice on how we are regulating ourselves. And in that sense, they would actually possibly, and I hope, be able to learn from us and then apply the internal regulations and the internal guidelines upon the community. I think it will also just generally help the community in terms of its image, in terms of allowing institutionals to get involved and for them to feel a little bit more comfortable. I think there's a lot of potential benefits from this kind of theory, so to speak. And yeah, you're not going to get your, potentially 100x yields when you're doing kind of these schemes, but you will ensure longevity of the market, of the crypto market, and you'll also ensure adoption, which in my opinion, I think for any real believer in cryptocurrency, I think adoption is really much the most important principle that we all believe. So yeah.
So
Absolutely. Thank you so much. So go ahead, James.
Sorry, no, please.
No, please continue.
Okay. It's a very interesting point that you make, Toufic, and I agree with it in the case where it's not regulated, where in a certain jurisdiction, like this specific activity is not regulated in a certain jurisdiction. I agree that it's a good move for the industry to get together and to set up a best practices. In fact, the funds industry, which I'm involved with, there were fund regulations. The fund regulations didn't speak about crypto funds specifically. You could do crypto funds according to our regulations, but there was a lot which was sort of unsaid when it came to crypto funds. So what the industry did is we got together and we wrote a manual of best practices for crypto funds, where we ask you to consider certain points that you may not necessarily need to consider with crypto funds, with non-crypto funds, with fiat funds or whatever, such as how is your custody going to work? There are questions in custody which you don't have to deal with at all, or you have to deal with to a much lesser extent when you're dealing with more traditional assets. So I agree that it's good to get together and set up a best practices than to wait for the regulator to do it, because then inevitably they will do it much more slowly and they will understand it less because they're not from the industry, and they may not necessarily get it right. However, in many cases, the activity that's done is covered by legislation, and so in that case, I don't know if people are not complying with the legislation. I'm not so sure how much a best practices group is going to help.
Absolutely, absolutely. So, go ahead.
Sorry, you could go ahead, Tatiana.
I was going to say we only have 3 minutes left, so I wanted to ask a last question for both of you. If I am a founder and I'm looking to create a token project or conduct a fundraise in the cryptocurrency sphere, what are some of the top 2 or 3 aspects that I have to consider? Off the top of my head, I'm guessing the first is where I domicile the project, but I'd love to have both of you answer from your perspective, since you're both on different sides of the world. What are the 2 to 3 key aspects to think of when starting out? Toufic, do you want to take it away?
I'll take it. Yeah, sure. So we primarily work out of the United States and Canada, but we are also setting up our offshore kind of offering here in Bermuda to be able to offer our clients certain products and services that would not be able to be offered within the Canadian or American jurisdiction. So I'll kind of give like a quick answer on both. And I'm gonna do the classic lawyer cop-out answer, and I'm gonna say it depends. I think that if you want to do a token offering based upon a exemption, a prospectus exemption, in Canada and the United States, your token offering can be done quite easily, and it's not that hard. You can then, if you want to be able to trade those tokens, there are certain platforms such as Harbor, which allows to verify purchasers' kind of qualifications, and if they fall under certain exemptions, that allows you to actually create some liquidity in that private market. If you want to go ahead and do kind of a public offering in Canada, there is other ways that you can do it. A great one that we like using is the crowdfunding option. You can also do offering memorandums as well, which allows you to open it up a little, but again, doesn't create that liquidity. If you want to go full on retail, you would have to file a prospectus, and that is a beast of a document. And I think we could all agree on that. So if you want to do that, you technically can, but I think in that sense, there could be a possibility in which we can then work with the Bermuda regulators here, in which we have good relations with, and allow you to actually get certain licenses here under the DABA, which allows you to actually make compliant issuances. Now, I'll always say as well, one needs to keep in mind that even though you are compliant in the jurisdiction in which you are incorporated, you always have to be compliant in the jurisdiction of the purchaser and where you're purchasing the tokens. So depending on what your market is and where you kind of would wish to sell or trade, this will have to come into play. But it's quite simple and completely compliant to do certain crowdfunding or private issuances here in Canada, and it's not extremely onerous regulatory wise. Any other type of retail kind of issuances, you're going to have to put a little bit more work, and yeah, so that's something that we at a firm discuss and analyze with you about and make sure we kind of have the best fit for you, so to speak.
Absolutely, absolutely. Unfortunately, it appears that we're out of time, but you guys are both such a wealth of knowledge, James and Toufic. I've seen several raised hands from the audience who wanted to ask you questions. Please, if you can share your emails or your Twitter so that the audience can reach out to you afterwards on the chat and ask those additional questions, that would be great. Thanks so much, guys.
Sure. See you guys.
Awesome. Yeah.